What's going on, ladies and gentlemen? Welcome back to the channel for another market update. Hope everybody's having a lovely morning, because it is the morning. It is 9:38 a.m. that we are recording this video, and that is because I missed yesterday's video. I did not have time, and today is one of those another time crunches, and I have to record this one early if I don't want to miss it again. All right, so guys. We are at major resistance. That is also a reason I want to put this video out earlier. All right. So by the way, guys, I will not be updating you guys on positions anymore and stuff like that. I'm still going to call out trades and stuff like that, but it's up to you guys to apply your own risk management, because I will be applying my own risk management at this point. And I realized, like, being in the spotlight like that and having just a bunch of comments asking how I'm dealing with, like, being down and stuff like that. How can they do that? It kind of just put me in a situation where I froze like a deer in front of headlights. And even though TA would suggest one thing, I would just convince myself that, okay, it's fine to hold through pain. Guys, I'm done with putting myself in that stance. Okay, I still will be calling out my trades. All right, I will also be adopting a new trading methodology, I guess we could call it. All right, and we will also go over that briefly at the end of this video. All right, because I am excited. I'm excited to do this with I'm just excited to see what this does to my account. I do think it is going to be doing something pretty great. All right, so with that being said, this is not financial advice, and let's get into the video. All right, so right off the bat, guys, we are at QQ's 200 MA. And we do have the next point of resistance, like $3 above that 200 MA. All right, or $4 above that 200 MA, which was this previous top that we had formed. All right, we had make these three highs right there, and that is the previous top that we then fell. I want to say it's 12% off a cliff very quick. Yeah, 12.5% in 10 bars, guys. That is 2 weeks. I think we do have that right around the corner. I've been telling you guys I don't have a crystal ball, all right? But these things do align with Catalyst, and I spoke on this probably throughout the past week. Maybe in the last week report I mentioned this, which was the error in my analysis was pairing the charts with the catalyst. All right, and I just kept getting the catalyst wrong. I was like, okay, it makes sense for this to happen. Well, guess what, guys? They did the most max pain type of thing that they possibly could have done, which was, as you see, we are still up here. And it's yeah, I mean, after we had this, let's just say this was on January 18th, and it is now what is this? This is 6 trading sessions later. That is guys, this is pain. That is what's going on right now. Okay, so I mentioned last night that it is in the dealer's best interest to close it on Friday. And now I did say above 400, under 401. It's actually underneath 400. So above 399 and underneath 400, and that is where the dealers will be paying out the least. I don't think that is going to be the case, but at the same time, the fact that they have done what they've done, okay, which is hold you up here until the next FOMC meeting, okay, guys, that is what I'm getting at right now. Until the next FOMC meeting, they have just literally held you up here. All right, so the fact that we have that big catalyst, and we know they're not going to be dovish on there, all right, because we found out in the last FOMC minutes that Jerome, and by the way, after the last FOMC minutes, we also had Jerome come on and literally, I believe Jerome is the reason this thing tanked, which was him saying, or actually, was it the FOMC minutes? I just do remember seeing in the FOMC minutes that their concern was the market rally, guys. We are at the highest level we've been at in quite some time, okay, since we had them making hawkish remarks over here. All right, and we're back in the same exact spot. This is the same range we were in when they were making those hawkish remarks, which was 410. So over here to 393. Okay, we'll say 392. But we're in that same exact range right now. So what do you think they're gonna say next week? All right, we don't have to stall out here until then. We don't have to do that. But I would say it's probable that they at least they keep you in a range until then. All right. I'm not going to say that is going to be what happens, because we very well can start the sell-off before the Fed comes out, and then the Fed just kind of makes it a whole lot worse, throws gasoline on the fire. Yeah, there's that. But guys, we have earnings. We have the big tech earnings next week. along with FOMC, and then we have PCE coming out Friday. We did have GDP coming out today. I don't actually know what that did, but as you do see, we did end up gapping up. Pre-market, we kind of did just inch up there. Okay, we kind of, did a little thing there. I don't know if it's going to be holding. I am just saying, like, what I just called out on Twitter was right here. I drew an arrow right here. Right, this is what I was watching. I had a feeling that we were going to come up, and this is literally just the. I found this out. Don't know why I didn't have this on my chart the other night, or until the other night. But the other night I was just sitting here charting, and I did find this trend line that we can put on, and then I did create a parallel thing, and it is that. All right, so guys, we do have like a pretty dang well-defined bear flag going on, which is actually kind of crazy. So we are going to be putting a target on the board for this. Yeah, no, we're not going to do it in this video. We will do it in the weekly report. You know what? Yeah, we will do it in this video. Now that I say that, I did miss yesterday's video, so it is the least I can do here. Coming over here, so we will go chart patterns. All right, actually, let's look at the visual index and just see if we can spot it on here. We need a bear flag. Do we have it? Now, I know the patterns. This is the patternsite.com if anybody does want to use this for themselves. I use a lot of what is on the patternsite.com, and I know I will show you guys. And actually see Bulkowski's blog, which I think is amazing. All right, he does the weekly things too. I did not know this until like literally I was on here the other night. Maybe it was last week, maybe it was 2 weeks ago. Not sure. I don't think I brought it to you guys though. But yeah, we literally have, this is like Bulkowski stuff. This is literally Bulkowski. All right, so Thomas Bulkowski, look at that. Like, that's so cool, guys. I did not know he did that. I would have been following them the whole time. All right. He probably would have gotten things decently right. All right, the week ahead, let's actually read this. At AB, we have a chart pattern called the double top, which predicts a downward breakout that happens when the index closes above the red line. I drew the red line connecting the lowest value between the two peaks. See, right here. All right, so we have that double top right here. All right. Yeah, so after the index dropped, quickly reversed and pulled back to the breakout price and kept moving up, in this case to D. With earnings season about to start, we'll see volatility increase, and I would expect a retrace of the move from December low to D. So he expects a retrace going from there to there. Is that what he's saying? The December low, that would be over here, right? I think that's what he's saying. I am not sure. That would make sense, okay? A brief look back. The following is a brief review of how the markets performed over time. The numbers refer to close move in the Dow Industrials. Okay, we don't really need to look at any of that. I did. So this is what I saw. Now, I think I discovered this 2 weeks ago. Maybe it was 3. Because I remember seeing this specifically where he calls out supports and resistances, guys. This is actually so freaking cool. All right, it is. Oh, wow. What's up with Bitcoin? Oh, let's see what is up with Bitcoin. Since I posted this the night before, check how the futures are trading before market open. Large moves can affect opening direction. Show a picture of cryptocurrency Bitcoin on the weekly scale. I drew a red line composed of short segments joined together. The first one, C, has a good slope, but not nearly as steep as the one followed. B, trend B has more touches than the prior line, which had only 2. What the heck is this thing? Oh, I guess these are different trend lines. You good? Okay. Pretty sloppy trend lines, Mr. Bukowski. Pretty sloppy. But you know what? Maybe not maybe. He knows more than me. All right. I can guarantee he's making more money in the market than me. If he was the one to write the books that I have been using, all right. Then yeah, there's that. All right, and not me. All right, like a lot of people. I assume there's a lot of people. That's who I came across or stumbled upon as the technical analysis, the go-to, the guy. All right, back in the day, there was Benjamin Graham, that was Warren Buffett's mentor, and then the technical analysis side of things. What I came to find is Thomas Bulkowski. He was the guy who worked on all of these books, these technical analysis books. So he knows what he's talking about. And he pretty much, so he has a software, and I actually downloaded the software. I don't know if I have it still. And by the way, that was just his blog. You guys can go look at that stuff too. And he does that, guys, apparently on the daily. So that is cool. I will be, when I remember to look at those, I will be looking at those. Look at flags. All right, let's look at flags and see if we can. Oh, not there. Okay. Maybe we don't even end up putting on a thing for this. Okay, because I don't know. This on candlesticks. I'm bugging right now, guys. We go to home. We go to chart patterns. We go to flags. All right. Where's the F? F is right here. Flags. Okay. But I already looked at that and I don't think it gave me any way of putting a price target on it. We will see though. All right. It would be this loose flag we got here. And again, like this is what I'm saying. I don't know how you would put the, oh, it would literally just be that to that. Is that what, it doesn't, like, you look over here and the measure rule is, look at this. Compute the height from the start of the price swing point A in the measure rule, figure to the right to the end of the price swing B, and then multiply it by the above percentage meeting price target. Percentage meeting price target is 46%. All right. So I guess it's actually pretty clear and cut. We just come over here and we just come a little bit like that. All right, and then you got yeah, all right. So 3327 calculator. 3327 times 0.46. All right, then you get a whopping $15 right there. Oh, but it's 333. All right, mess that one up. 333 times 0.46. All right, 153 to the downside. Then you come over here. Well, that's just assuming we're going to break right here. So assuming we break right here at right around 3,900, you come down here and we're going to bring this, we'll go to 150. All right, so here is the target for the bear flag on SPX. All right, you come over here. All righty, we'll make you a flat number though. We'll go 3740. That works. All right, so that is the target for this bear flag that we got going on right here. Don't mind this. There was a lot more. The mess was going nuts the other night. Sitting here charting, guys. Guys, charting is pretty fun. All right, it is pretty fun just looking at charts and finding different patterns that are going on. At least I enjoy it. But then again, I'm a weirdo, so I mean, there's that. All right. Sorry we spent so much time on the patternsite.com, but that is okay. All right. We missed yesterday's video, so we have to, I mean, I'm not going to say we have to make anything up because it's whatever. And there still was the written analysis, but look at that, guys. Look at that. We're reversing off of that trend line. This is literally what I called out on the written analysis. This is what I was, literally just said before market open. That's so cool. Okay, that's literally so cool. That means your boy is going to be up. And yes, guys, your boy will be going back to actually trading, okay? Because your boy does call the charts, like, decently spot on. Like, I am decently spot on with the charts, all right? I just don't sit there and do what I got to do, all right? And to help me do what I got to do, I will, I'll be talking about what I'm going to be doing at the end, all right? Because it is a system. Well, it's a very, we'll say, a broad-based system. It's not, it's we'll say a basic system. A very basic system of some sort of risk management, okay? And there also will be in all my trades, there will be stop levels, guys. There will be stop levels. And because I'm going to be doing what I'm going to be discussing, I don't think I will have that problem of taking that loss if that stop level comes, you know, if that ends up coming to play, all right? But yeah, we're going to talk about that after the TA, all right? So now that we spent, like, so much time putting on a target on the board for, actually, I don't know where this came from, so we're going to take that off. I have no idea. Maybe it was the target for this bear flag. You do also have this big wumpa jumper right here, and let's put one on for that too. All right, bear flag for QQ, so $80. All right, come over here, calculator. All right, so we got 80 times 0.46. All right, $36. We'll round down because being conservative, you broke out over here. What do we say? 36.80, so $36. All right. Geez, so this is exactly where that target. I now know where that. I know I know where that yellow line that we just took off came from. All right, but we're gonna make this a round number at 232. All right, do we have any support by there? Yes, we do have support. And holy Jesus, guys, this is what I'm talking about. This is what I'm talking about, guys. Technical analysis always comes together. All right, so the same, like, guys, if you come over here, all right, so this is Monday, June 15th. You come over to your SPY, guys. My zone that I've had for months on SPY. We now have a target on QQ that brings you down to, holy sweet baby Jesus. If this works. No, never mind. They're not the same date, guys. They are not the same date at all. Not even close. It was completely wrong there. Completely wrong. Either way, all right? Like, that is what I'm talking about on QQ. You're probably, or on SPY, it's going to be the same exact thing for QQ. You're probably going to come down here and you're going to bounce on one of these branches, and one of these branches is going to hold, and it's going to catapult you all the way up there. All right, all the way, probably going to come back. I'd see you already broke this trend line, but you're probably going to, with all likelihood, you're going to come back down. And then on the next one, you're probably going to have a significant breakout of that downtrend. But like, as I've been saying for a few weeks now, guys, you're not going to have any meaningful or decent sized breakout here. With your momentum oscillators where they are. Like, as of this week, we have all the indices now in oversold territory on the weekly CCI, as well as the stochastic. That's not good, guys. All right, you want to see some rallying that lasts for weeks on end. All right, maybe even like something like this, a couple months right here, 2 months. All right. You're not starting it when you're right here, all right? And yes, I say starting it because, like, you need to build momentum off of this trend line if you are going to go. And yeah, your weekly momentum oscillators are in overbought territory. At the same time, you now have triple bearish divergence going on SPY's daily CCI. So that is something to note as well, all right? That is not okay. All right, that is the same exact thing we had going on over. You did have this going on over here where you had this triple bearish divergence, but you come over here to, I think it was DIA. You had like a quadruple or even a 5 bearish divergence, 5 points of divergence there on DIA's CCI. Well, now you got a triple bearish divergence on SPY. Okay, guys, I told you guys all the time. I tell you guys, actually, I don't have a crystal ball, so I never know like when exactly things are going to play out. But we do have catalysts, and we can pair those with the catalysts. I haven't been the best at doing so recently. By the way, guys, random fact, I just found out the other day, bully sticks, guys, are just bull penises, all right? So that's a thing, all right? So if you're giving these to your dogs, which I just started giving them to my dogs because they rip apart everything else, just know that's exactly what you're giving your dog. So, yeah, just a little fun fact that threw in there. I looked to the right and I saw him, so, came to mind. Look at that, guys. We are literally reversing off of exactly where I was calling out on Twitter today. And guys, like, even though I'm not going to be updating you guys on my exact position stuff, I still will. Just know, like, I'll call out the risk management side of these from moving forward. All right. And I will also be, I'll discuss at the end of the video what I will personally be doing to make sure something like this never pops up again. And there needs to be, in order to make sure that happens, there needs to be some sort of systematic approach. All right. So we're going to put together a rough systematic approach right there after we go over the TA. But yeah, you're reversing here off of QQ's 200 MA. You do have this gap fill now at 288.36. SPY has the gap fill at 470. I wouldn't be surprised if you do have at least a temporary reversal off of that. Holy Jesus, guys, that is so sexy. All right, that is gorgeous. All right, that is flippin' freaking gorgeous. Your boy is up 20% now. And yes, guys, we will be perfectly fine. This is what I was saying, guys. I knew, like, in the end, I would end up doing things like this. I will make sure I am perfectly fine. Whereas other people, if they're relying on me, which, again, you shouldn't be doing that because it's not financial advice. I am someone who is, yes, guys, I will be insanely rich. You can't guarantee anything in the market, but I can guarantee I will be insanely rich. And I can also guarantee that this channel is exactly where I will be documenting exactly how I get there. All right, you've seen one of these mistakes I just made. This is why do you think your boy is 23 years old and is doing what he's doing right now? Because your boy has made a ton of mistakes and reflects on all of these mistakes. gets back up each and every time. All right, so that's why, like, just the amount of hate, it was definitely getting to me. I don't want to expose myself to that anymore. I talk like I'm not gonna say recently, this past week or two. I'm not gonna say I've tried throwing good vibes in the video, but you know what? When you you don't have them coming your way, it's kind of toxic. But that's like, it proves my point where hey, you're the sum of the 5 people you spend the most time with. In this case, I'm the sum of I mean, like, guys, I'm not gonna say, like, I do go out and I talk with my friends and stuff like that, go out sometimes, but like at the end of the day, I'm not the social butterfly. All right, I just don't expose myself to like a lot. I just don't. I don't really care for it. If you want success, you're going to have to put yourself around people who want the same exact thing. All right, and if you have those toxic people that are trying to call you down, you got to remove those from your life immediately. All right. There's just no reason. And that's how I see things. Okay. You guys can look at things however you want. But I have taken a lot from Alex Hormozy. All right. And that is one of the largest things he's taught me. Do not put yourself around anybody who does not, like, if you want to get to where you want to go, and you, like, everyone knows exactly what they need to do. All right. Nobody wants to do it. And in reality, one of the biggest things is put yourself around those people. All right. So yeah, guys, I'm not going to be exposing myself to all that hate I just got. I don't exactly know how I started talking about this, but I assume it was yes, guys, I still will be calling out all my trades and stuff like that. All the risk management will be included in the start of the trade, just so you guys know exactly how I will be applying that risk management to it. So then you guys don't have to sit there asking me, oh, are you still in this? Oh, what is happening with this? Oh, you're down on this. Oh, yo, it ripped. Oh, you're up. Oh, no, but guess what? I got stopped out. All right. So like, you're gonna know like what I'm thinking before I'm thinking it, so then you don't have to ask me. So that's going to be the goal of what I'm trying to do here. All right, and that is going to be a way that I still can sit here and call out all these trades, all right, that I am seeing and that I will be taking. But at the end of the day, I will not have to be sitting there holding anyone's hand, and I will not be feeling responsible at the end of the day, all right, because everybody will have exactly what I have, and everyone will know exactly what I am thinking before I am thinking it. So then at the end of the day, yeah, you have no, like, there's no reason you could be mad at me. All right. there's that. All right. So let's get back into it. Let's get back into it. But look at that, guys. And this is what I was saying. This is probably going to be a bounce spot here. It's probably going to be the same on QQ. You rip higher on QQ, and you have a little ways to go down. You got like $2 to go down. But yeah, guys, gap fills do act as pivot points. All right, even if they're just temporary pivot points, you got an 80% chance of reversal at them. All right, so I wouldn't be surprised to see a bounce here. I did see you flip the 200 MA here. This is what ultimately made me want to get out of. I was in Netflix puts. That's ultimately what made me want to sell those. I ended up flipping to calls. I went and got the 284 QQ calls, Jan 30s yesterday, right about at the lows. All right, so that is pretty cool. But yeah, I saw on SPX and SPY you were literally flipping the 200 MA, and you come down here onto SPY and QQQ. All right, or not SPY and QQ, SPY and SPX. Look at this. You were also on this on the hourly time frame. You were also flipping right there at your 200 MA. But I saw you were getting reactions here at your this right here at your trend line. So okay, there's too many factors of confluence here. Let's just do the smart thing. We haven't been doing the smart thing. Let's do that smart thing, and there you go. All right. And yeah, it ended up working out. But yeah, I rode calls up there, got up to right under QQ's gap fill yesterday. So that ended up being pretty sexy, pretty smexy. There ended up being that. And then yeah, guys, as of now, I'm in Feb 17. Feb 17 270s on QQ, and I am in the March 3rd 380s on SPY. All right, so that is what I am going to be using to, and from here on out, from like right here, I'm telling you guys right here, like from right where we are right now, the plan is like, yeah, now I get to hold, and now I get to watch what I've been calling out, like what is going to be happening. Again, no crystal ball, so I don't know when it's going to happen. But yeah, guys, I mean, there's no way you're breaking here. This is where all the last rug pulls have came. The all massive sell-offs that we've had in the bear market have happened around these trend lines here in QQ and SPY. I don't think this is going to be any different. I think they are doing like a bull fake thing where they're getting you above your 200 MA, above your trend line on SPY, all right? And yeah, I do think it is going to be a big fake out. I think they're just drawing in as many people as possible, and then they're going to rug you, all right? You look at the daily time frame, look at where you are, all right? Look at that, where that RSI is. Look over on QQ, it's even higher. Now look at something over here on Mr. Apple. Now this is actually something I was looking at on a scanner. These brought these to my attention, so we're going to be looking at those. We can look at those at the end of the video. I do have to add Apple back on here. All right, so that's what I was trying to find here. Come over to Apple, guys. Look at Apple's RSI. All right, 64. Now I said in the written update last night, I had mentioned that Apple's RSI is so close to 70, and earnings are coming up next week, that I wouldn't be surprised if you do end up seeing Apple's RSI regionally coming up to that 70 mark. Or, I mean, but then again, you could get the rug pulled at any time. You have the setup to do so. It's here, all right? Apple's RSI is no longer down here. Like, guys, by the way, this is why I'm going to be doing what I am we're going to be talking about in a little while here, all right, about my personal risk management for my own account, and making sure I never get into the situation that I got clowned on publicly for. Just ensuring that I never, and that's the point of mistakes, guys. You have to make sure you don't get into these situations again. I'm going to make sure I don't get into that situation again. There have been situations like that in throughout this bear market that have happened. All right, I will not say they have not been in that exact same manner, and that is what I will. That is why this is being put into place. Where, hey, that physically cannot happen. It, like, guaranteed just can't happen. All right, but it would have, with this in place, I probably would have taken an Apple trade here. All right, and I definitely called out an Apple trade here. I definitely would have taken it. It just would have been another trade under. It would have been another positive rep under my belt. Or even if not a positive rep, it would have been just another rep under my belt. Okay, and at the end of the day, bad reps actually are they're going to teach you more than those good reps. All right, but you need to see the good reps to see you're doing something right. And that is, I'm very much so looking forward to seeing like a lot more of those than I have been exposing myself to over the past few months. All right, but yeah, now you do have this daily bearish divergence going on Apple. I said not in yesterday's video, I think it was the video before that, maybe it was before that, that Apple's CCI, you were right under Apple's trend line. Apple CCI was coming up. It was you didn't have any divergence, but you were just extremely overbought up here. All right, well, now you do have that bearish divergence. You do have the triple bearish divergence over here on SPY. All right, QQ also has another bearish divergence. SPX obviously has the daily one we just spoke of. We didn't even talk about Mr. VIX yet. We will be talking about that in a second. DIA never made it back up. Okay, there's that. And you have the same exact thing going on IWM. You have the bearish divergence. All right, and Bitcoin, you have a triple bearish divergence. But again, who cares about Bitcoin? Okay, who cares? It'll fall with the market. There's that. All right. Where were we just now? I don't remember where we. Either way. All right. You did have the inclining volume yesterday, which in my written update, I did point out that, yes, you traded flat, okay, and some of them closed down yesterday, slightly down. But where was the volume coming from? It was coming from the buyers, all right? So I wasn't going to be surprised if you did end up pushing up to that trend line and having that continuation because, guys, recently the volume has been showing us where things are going to end up coming. Okay, look what happened with SPY right here, okay? It was over here. Right here, so you fell that day, 0.73. You end out the day, and it was off that declining volume. That shows you that the sellers were not supporting it. Okay, they weren't stronger than the sellers the previous day. All right, they're fizzling out. All right, and then look what we got. All right, that was also, I do believe we had the bullish divergence down here. Yeah, you did have that right there. That was your first warning sign there. But you come over here, all right, and there you go. You end up going up, and you had the inclining volume that day. Well, guess what? You had another day of continuation, all right? So then you went back up for that continuation, and then boom, you had this day of, what was that? Declining volume, okay? So you're now declining volume. You're pretty flat, all right? Pretty flat. And then what you have the following day, all right? You did end up having the rug pulled, okay? So you were inclining on those days right there. and you had the declining volume on your little flat day. All right. And there you go. Okay. Um, but yo, all right, like it doesn't always have to happen like this, all right? You're not gonna be able to really pull out these little scalps forever. Okay, anybody really trading these little moves? I'm serious. You're about to be wiped if you are going to be catching yourself in a little move to the upside. It's about to be painful. All right, I'm serious. You're probably going to get a move like you had over here. All right, that brings you down 12% in like 2 weeks. Or you come over here to SPY and you had that down like 8.5% in 2 weeks here. All right, again, keep in mind $30 down in 5 trading sessions. It's a bit right there. That's a little much. Guess what? If that does happen from where we are right here, let's say it even starts today. All right. Well, guess what? In 5 trading sessions, you're coming down to just about 380. Okay. No, not just about 380. I am looking at that completely wrong. You're coming just about to 370. Okay. If you're going to have that $32 sell off that you had the other time, you're going to 371, 372. That's nuts. Okay. Just to explain the math on the contracts that I just entered right now, the Feb 17, okay, the QQ puts, okay, and the reason I got the shorter dated ones are going to be the QQ ones, and that is because you fell quicker and more on QQ, all right? So there was that. So that did occur on the last one. Either way, this is tech, right? Tech is going to be the one that is going to be tech is a sector that's going to be panicking from mentions of higher interest rates. Okay, so there's going to be that. Look at that. You were reversing right off the 200 MA. That is picture perfect right there. Couldn't have been more perfect. Really could not have them. But yeah, look at that, guys. You did have the inclining volume yesterday, and that's what I was saying. The volume has been showing you where you're going to go. Inclining volume, and you were having the buyers stepped in most of the day to provide that volume. So you had the buyer's volume in there. Look at that, exactly off of that top trend line. You can't really see it on the daily, but you see it on the hourly. But yeah, there's that. All right. But yeah, the math behind what I was just doing, or what I am doing, and this is, yes, this will set me up to the point where I have all my money back and more. There will be that. Let's just go over the math here. All right. So QQ, let's say QQ falls from here 12%. Okay. You're coming down here. Okay. It's 12.5%. You fell over there. You're bringing down to 256. Okay. 256. I think this is going to happen extremely quick when it starts. I think we're going to have the first 1 to 2 weeks. It's probably going to look similar to what we had over here, where you fell 334 down to 307. There you go, right there. There's like $20 right there. That's 2 weeks. But more likely, I do think it's going to be something like this, where in 2 weeks you did fell $40. All right, and if you do that, you're going to have a very substantial. It's a very substantial move down. All right, you're coming down 250. The 270 contracts, if you do come down to 250, they'd be 2K. But all I'm really playing these for is that move down to 260. I do think that is right on the horizon. It moved down to 260. So keep in mind that 12% move that we got down before, 12.5%. Well, if we have that again from exactly where we just topped right there, all right, and not saying you can't go a little further. If you do go a little further, it's probably going to be at the 296 spot right here, 296.88, which was that previous top over there. All right. But if you do end up falling from here and you fall that 12.5%, you're going to end up going into like 255. All right. And that's under 260. Each contract is going to at least be going for $1,000 down there. All right. The March 3rds. All right, the March 3rds, they're not going to gain as much, right? But it's going, like, I'm playing those the exact same manner. I'm playing them to get in the money. And they're just the ones that are going to be catching that full move down, all right? So on those, I'm likely going to be catching the move all the way back down to lows, where you're coming back down to the 348.11. I am likely going to have enough time in those to play that. But if I do see signs of us letting up, like I said, if we see the 4-hour SPX bullish divergence going on, then I will be forced to, I will take profits on those and wait for a re-entry, depending on how far along we are. All right, so that is my game plan there. That is how I will be perfectly fine. And that's what I'm saying. I will do what I need to do in the end. I'm not going to leave myself in an insolvent position. All right, but at the same time, keep in mind, I did make a video. I think it was 2 weekly updates ago, telling you guys about my worst case scenario, which is like, hey guys, I get to like literally just sit in my hands and wait for the Mar account to just absolutely make me a ton of money. because all I have to do is just wait on Mar. It's like extremely easy to sit here and just literally wait on Mar. All right, it's at $9 right now. It likely comes back down to this 350, maybe even this 250 mark, depending on where Bitcoin ends up coming down to bottom. All right, now I did say in my last night's written update that, hey guys, Bitcoin is it's bottoming. Okay, this is it. I told you guys that I would be telling you guys when the time came. It wasn't back over here. I told you guys that, again, I would tell you it's not then. Well, guess what, guys? It's now. Okay, I'm not saying go buy now. That's not at all what I'm saying, okay? But I'm saying we finally have that bottoming sign. All right, we finally have it. All right, you made, look on the monthly time frame. Okay, let's just see what marked this top. All right, so you had that divergence. You had this big fat guy over here, and you actually started all the way over here. So it was like that to there, all right? But either way, you got that, okay? And that marked your top. You moved to a high, and you didn't have, you know, you had that point of divergence there, okay? You come over here to the weekly time frame, it's the same exact thing. You come over here, all right, and this is another thing, okay? I didn't use the CCI at this point, but you could see it on other indicators. But look at that. You, again, had the CCI, the bearish divergence on the weekly time frame. Now mark your top. All right. Well, now what am I going to be looking for, guys? I'm going to be looking for you to come under here and form a. I don't know if it happens like quick, like maybe it just comes back down into the weekly oversold area, and this, like, either way, depending like where the market will be. Okay. Like I'm going to be for my Mar entry, I'm going to be watching Mr. SPY right here. Wherever SPY is bottoming at, that's where I'm going to be loading the boat on Mar. Now, I do think the shorts on Mar are probably going to start squeezing before you do end up getting, before you do end up seeing a bottom here on Bitcoin or SPY. And that's just exactly what we saw here. Mar was just absolutely going crazy here. Now, did any of us think Bitcoin was going to be rallying 30%? I didn't, all right, or 45%. Jesus, it's crazy, all right. No, I didn't think that would be taking place, but this is proof of concept of what I've been trying to tell you guys. Mara will run way harder than Bitcoin, way harder than the other miners that I've seen, at least, because the short interest was 40%. I'm going to have to look back on that. We do have a rising wedge forming. This could be a reversal pattern right here. Which, again, if this is aligning with the overall market, this will be happening within the next few trading sessions. But again, I don't really care if Mara does move with the overall market to the exact T, because when Mara is down where I want to buy Mara, which will be at this 350 again, I will then be buying the next. I'll buy a little more at $3. I think we tapped that. Or nope, we just missed it. But yeah, I'll buy a little more at $3, and then the last and biggest entry is going to be if Mara comes down to 250. There you go. All right. But in the end of the day, Mara's only going to get down there when you have the two factors that control Mara, which is Bitcoin and the overall market. If you have those going down, Mara will be going down. If you have those going up, Mara will be going up. You had both of them going up here, Mara got squeezed. All right. It's the same exact thing we've seen on some of these other names. All right. This is one that's been talked about. Okay. You have the HBLT. No. Oh, what was it called? I don't know. Okay. HBLZ. No. Oh, this is on the futures though. Nope. Still no thing. I don't know. Okay. But we've been seeing a lot of squeezers. Okay. I'm not going to be covering the squeezer here on the channel just because those are things that it's kind of I just don't want to cover them. There's no point in trading them, in my personal opinion. At least I have not seen a point in trading them. But I will say you do look like you're probably going to be breaking out over the next few trading sessions. Probably going to have some explosions. Don't know though, because I don't really care about them. All right. But yeah, guys, SPY did end up having that bounce off of the whatever it's called, off of the gap fill. This is a prime example of when gaps are like the other side will run for the door when they're about to fill. All right, so this was an example of shorts covering right before you filled that gap. Shorts were running for the door, longs were rushing in. That is what produced this move. I don't think it's going to last. All right, I do think we are right at the top, but keep in mind we do have We have the first of all big catalysts tomorrow. We have PCE in the morning, all right, before market open. All right, so that could gap us down. That could make us trade flat. But keep in mind, we have Apple earnings next week. We have all the big names. I think we have Google, Amazon as well. All right, and we already had Microsoft. That was a nothing burger. We had Tesla. That was a bit of a nothing burger too. But just keep in mind, it makes sense for them to hold you up here until one of those big catalysts completely shifts the narrative. And guess what, guys? If the Fed comes out on Wednesday, which it's next Wednesday, this happens. So the Fed comes out and gives you like a 0.5 instead of a 0.25. That tanks the market. Okay, if the Fed comes out and has hawkish comments because the market is up here and they're like pretty much destined to have hawkish comments, that tanks the market. So like we just need one of those two things to come along and shift the narrative, or they're probably both going to come along and shift the narrative. All right, if the economy is strong, which I'm pretty sure that's what this morning's data showed us, then they got to come out and like they got to not pump the stock. All right, if the economy is strong and that's pumping the stock, they got to counteract the pumping of the stock by coming out in a hawkish tone. All right, so that is what I think is going to be happening. Before we go our separate ways, let's just look at the 4-hour time frame, and we still have to actually talk about a few things. So this is going to be a long video, but then again, there wasn't a video yesterday, so you don't got to make up anything, but that's there. All right, you do have a bearish divergence going on in the 4-hour time frame here on SPY. All right, you are having your stochastic cross down right as your CCI is coming up to the sell line, momentum sell line, or sell momentum line, whatever you want to call it. Clearly got that going on right here. You come over to the 1-hour time frame, and you are in overbought territory over here as well. All right, you again did make a very slight bearish divergence going on there. All right, your RSI is over here. You definitely do have a bearish divergence going on the RSI. All right, moving on to, where is it? SPX. All right, we still actually never went over VIX. So this is what I was calling out in this morning's Twitter post. Coming up here in QQ, coming up to that 200 MA and getting rejected. And right here, if we come over to the daily time frame, we literally got rejected right at it. All right, literally right at it. So that ended up working out, but I still do say there's the chance they just hold you up here. Maybe you stay up here in between these. Maybe this gap fill and this creates a type of range here. This will be your resistance, so sellers will be lurking there. Come down, buyers are lurking here at the gap fill. There you go. That's what creates your range. All right, so we're gonna have to see. But we do have the earnings next week, so again, that is probably that, and FOMC is probably going to be what tanks this bad boy. That's probably going to be what completely shifts the narrative into that. Hey guys, we're in a recession narrative. Everything is terrible. There you go. All right. But yeah, looking at SPX's 4-hour time frame, you do also now have a bearish divergence on. Do you? Yeah, you do. You have a slight one on the 4-hour time frame going on right here. So if you were to fall from here, you would be completing that bearish divergence. All right. Not sure if it's going to happen, but that is what would be taking place if you were to start the fall right here. And now if you go up and push up, then that's going to get nullified. All right. That's just going to be the thing. You also have the same exact thing in your RSI and stochastic coming over here to the hourly time frame. You also have a bearish divergence going on here, but either way, you do have your CCI coming straight up into overbought territory. Your stochastic is hinged down. You have the bearish divergence going on the hourly RSI as well. So either way, guys, you do clear as day have momentum fizzling out here, and we come over to Mr. VIX. All right, so Mr. VIX, man, you hear my baby whining? Facing a wall right now, whining. Really? It's not even where my door is. She's just facing the wall. You've been repeatedly rejected by this trend line up here. All right, these two trend lines do create a falling wedge going on right there. The day you close above here is probably the day you start plummeting on SPX. All right, and SPY and QQ, DIA, all components of the market. But you're currently in the middle range right here, and this is why I say, I wouldn't be surprised to see them hold you up here. You still can come down and tap the bottom of this trend line, which would create a lower low, and then we would finally have that confluence that we have seen throughout this bear market with the bottoms that have formed on the VIX, all right, which is we've had 5 out of 6 of them have that bullish divergence going on. You had one right here. You had one right here, I believe. You had that right there. Come over here. You had that. All right. Every time the CCIs came into over sold territory, you have seen the bullish divergence pop up, and that has given you a pop on the daily time frame. Now you've also seen the bottom marker pop up. We've here on the channel, I've named it the bottom marker. I have named it the bottom marker. All right. We've seen this pop up when a bottom is forming on the VIX. You got this bad boy right here. You got that bad boy right here. That bad boy right here. I know you got one right over here as well. All right. But during this bear market, we've had one, we've had two. You did have this not get marked by the bottom marker. All right. But that's why I say, I think it was 3 out of 4 times right here. So you had this. This was the only one you did not have the bottom marker pop up. Well, guess what, guys? You now have the bottom marker. You did have this false bottom marker signal right there. All right. But you know, SPX also was not at its trend line. And every single time, if we just look at now, I have done this in the past few videos as well. All right. But you look at this. All right. So we now have, so that is Tuesday 17, Jan 17. Come over here to this one. This is August 15th. This is April 4th. And this is Monday, January 3rd. Okay. You come over to SPX. All right. What is this? All right. You come over here. Oh, it's August 15th. Look at that. You come over here. This is April 4th. Oh, look at that. Okay. What is this right here? This is Monday, January 3rd. All right. So every time the bottom marker has been there, has been when SPX was up here at this trend line. All right. And it either produces that week or the next week is the bottom. All right. We didn't have the bottom marker forming when we were up here, if I am looking at this correctly. What is this? So this was Tuesday. This was December 27th. You come over here. Maybe you did. All right. Maybe you did. But either way. Oh, no, you didn't. You had the bottom marker, the false bottom marker signal popping up down here. All right. So, yeah, there you go. So every time you've been at trend, SPX's trend line and that signal has popped up on the weekly time frame of Mr. VIX, you have seen the bottom on VIX get put in, and you've seen the top on SPY get put in for the following few weeks of red. All right. I do think this is going to be the same. When you're doing any form of analysis, you got to reference history. That is a lot of my analysis is referencing the charts, which is just looking back in recent history. Micah, hang on. Just give me like 2 more minutes, I swear. All right. But yeah, guys, that's all in all. That is pretty much it. Okay. You have SPX at extremes here on your smaller time frames with the bearish divergence on your 4-hour time frame. In your daily time frame, you have the triple bearish divergence going on now. That is also a thing. All right. So I mean, hey guys, this could be the setup. This could be where the setup finishes up. All right. You are up here at QQ's 200 MA. You did temporarily reverse off of your gap fill here on SPY, but I do not think it is going to hold. I think this very much so can be a topping tail, just like we had over here. I don't know if it's going to be. You had this gap up right here. Maybe that this is what acts as one of these gap ups. Like you gapped up here, form that topping tail right there. There you go. I don't know if this is going to be the same, but guys, we have, we have like a bearish setup with all of these like catalysts right around the corner. And we do know the Fed is not going to be dovish. We know for like not a fact because nothing's guaranteed in the market, but we know what the Fed was thinking in the FOMC minutes. Then we know what Jerome last said, and we're in the same exact spot. So I don't think they're going to sound any different, which means they're going to take a hawkish tone. All right. So that'll be fun. All right. That'll be super fun. But come over here to DXY. I've been calling out this for a while, guys. Whenever DXY does decide to bounce here from these oversold levels on the weekly CCI, weekly stochastic, weekly RSI down here, you don't stay down here very often, right? And the last time you got down here, you had a mega run, all right? So not saying another mega run can happen, but I do think you're probably going to get that bounce at some point down here, and it's probably going to line with when SPX decides to take a dive and probably come back down here and visit these lows before seeing that cycle back up. You're going to need to see these weekly oscillators have their cycle down before they can come back up. And when they do, you're probably going to see this weekly RSI not stall at this, I want to say 55 area. Yeah, right. So I tell you guys, not all the time, but something how I have been using the RSI for probably the last year, I've seen it this way. The 50 mark, yes, that's the middle ground, but it really is the 45 and the 55 mark where bulls and bears get to take control. All right, if you come over here in the weekly RSI, look at, you're stalling right here at the 54 mark, all right? You're right under that 55 mark. Bulls are not getting to take control. When they do get to finally take control, it's going to look something like this, where you're going to pop up and then you're going to flip this 50 mark and you're going to, you're going to do this and you're going to stay up here, all right? And I don't think you are going to stay up here until you have QE get turned back on. I don't think you are going to have this happen again, where your weekly momentum oscillators stay in overbought territory and form mass amounts of divergences for months on end. I don't think that happens until you do have QE come back on. And for the QE to get turned back on, you need to see this cycle go bust, okay? And I don't know what form that comes in, but I think it comes in the form of a depression. I think we are currently living in a depression. This is the start of a depression for probably 5-10 years. I don't know. I'm just saying they've blown this thing so big that it's definitely the biggest bubble that's ever happened throughout history. And I think it's very likely that we end up having a depression. Okay, not just a recession, just where everything's very bad. Everything needs to be very bad. And I've given my case throughout the past few weeks for how there cannot be a soft landing, because in order for things to get back to normal, for like not even inflation is not the problem right now. The problem is the fact that prices are just so high. It doesn't, even inflation goes to zero, it's not going to bring prices down. What we need is a deflationary time. What we need is people to go through mass amounts of struggle to the point where they can no longer afford things like food. And then, the producers sitting there, they're scratching their head like, crap, man. Now we got to start taking the L here. We got to start taking the hit. And then now the consumer isn't going to be taking the hit. It's the producer taking the hit. Prices are finally going to be coming down. And there you go. That's how a deflationary time brings happy times. All right. You need them. All right, guys. And there's also a saying that goes, I'm probably going to botch this, but hang on. Weak men create hard times. And what did I just say? What is the saying? It's like weak men create hard times and hard men create easy times. It's something like that. No, hang on. Hard times create strong men. Strong men create easy times. Easy times create weak men. Weak men create hard times. So it's a cycle that has to go on and on. All right. So like, we probably have, if you look back throughout history, we probably have had 10 to 20 year cycles where things get really easy and euphoric, like we've had over the past 20 years. And then boom, things are going to get really tough. And that's probably going to come in the form of a depression. So whenever that does come, it's going to be really hard times. All right. And it's going to have to create those hard men, because to get out of the tough times, you're going to need the people who get created from the tough times. And they're going to be considered the strong men. And they're going to bring us back into 10 to 50 years of easy times. All right. Probably 10 to 20 years. All right. I do believe there are cycles that goes on. I think there's one macro cycle that goes on in the world, and I think we're right at the top of it. All right. Well, we've already started peaking. We've started coming down. But guys, imagine an RSI right now. Okay. So this is right here. So this is where we are right here on the cycle. Okay. This was 2000. This was, we'll say .com. Okay. .com hit. You had 08, you came back here, down here. Okay, that reset your cycle. You didn't get to blow the bubble super, super, super big. Well, guess what, guys? Now you've blown it super, super, super big. You're now at 70 on the RSI. You have started turning down here, but now people are thinking like, oh, wait, we can start, the Fed is bluffing. We can now, the Fed doesn't have to go super tough. All right, the Fed doesn't have to go super tough, and that means we're going to come back up here. All right, and now we're at the, guys, this represents easy times up here. This is easy times. We're still up here. All right. We haven't gone through what I've been talking about for months, which is like, hey, it's not the raising of the interest rates that's going to damage anything. It's the holding interest rates at heightened levels that is going to break things. That's literally just going to make it so the whole monetary system is just under immense amounts of pressure. Okay, guys, like the whole system is debt based. So when, when rates are up, everything gets more expensive. That's just by default what happens. Okay, and when like we have that going on, people are going to seek safety in the dollar. The dollar is going to go up, but guess what? Things also become more expensive when DXY goes up. All right. So like things will break. We just have to give them time. All right. And we're probably going to see exactly what I just described here, which is like, hey, we've started coming down here. All right. So we've started the trek down, all right, from the 70 RSI. And keep in mind, this is tough times down here. This is when everyone wants to be buying. You need to be buying down here because it's tough times. It's when you can literally create that generational wealth and hold something for 10 to 20 years. And it'll probably do something like, like the dot-com bubble. Like dot-com bubble 08, where, you could have held things like Apple and probably got a decent return right there, right? I'm never going to be doing that because what we cover here on this channel, this is like, generations ahead of anybody who is going to be doing that, the buy and hold strategy. But either way, guys, we're coming down. Everyone's getting all excited. Guess what? We're probably going to come back up. At some point, we're probably going to come back up, and then we're going to double top, and then we're going to come back down. It's probably going to happen on the chart. I don't think you don't really have a reason to come back up and break all-time highs, so I don't think that happens. But again, I'm not going to be closed-minded. If something's happening and I see like it can happen, if we do have momentum suggesting it can happen, then I'm going to have to be open to it. All right, you do have this on the monthly time frame. I did also say on Bitcoin, guys, we got signs of a bottom. We have a bullish divergence on the monthly CCI down here. I'm now waiting for the pullback that's going to bring the weekly CCI back down into the oversold territory. And that is where I think the market likely bottoms too. I don't know where Bitcoin will be when that happens, but that's what I'm going to be watching for. And then I'm also obviously going to be watching SPY. It's probably going to come down into the zone. You just got simple support and resistance, okay? You got support, all right? You got gap support, you got like actual support. There you go. These are your branches. You're probably going to bounce on them. All right. But what was I saying? What was it you're saying? Oh, DXY. What was I saying? I don't know. Okay. We're gonna talk about risk management. Okay. We're gonna talk about Henry's risk management more importantly. Okay. So I clearly do have a high risk tolerance. I like taking big bets. I like it. I love them. Okay. I love them. My inner gambler speaking. Okay. But I can't. Okay. I can't take big bets because I can be right for months on end, and then one big bet just completely rattles me. Point where what the heck just happened? Why would you do that to yourself? I just did that to myself. These past few days, I've gotten back up. All right, I have my account has it is now all I really need to do is get a 4x, and I am exactly back to where I am. I will be around 60 G's. All right. And that'll be fine. Okay. That'll be perfectly fine. That's why throughout this video, in the beginning of the video, actually, probably in the first 20 minutes, I outlined what I was doing with the Feb 17 and March 3rd puts. All right. And yeah, I just need, I literally just need us to come back down into consolidation now, and I'm perfectly fine. This is what I've been saying, guys. I'm going to do what I need to do. All right. But like the feeling responsible for what other people are doing. Okay. That freaking rattled the crap out of me. I will never do that again. All right. It literally put me in a position where I was sitting there acting like a deer in headlights, calling out the TA, calling out the like, we can be going higher here. And like there were scenarios where I was saying it is likely that we end up going higher here. All right. And yeah, I wasn't listening to myself at all, and I couldn't stand doing that. I like literally, it was driving me absolutely insane. I was like trying to act like it wasn't like, stressing me the crap out. But no, dude, I like just wanted to not do anything, dude. Like, and I'm not going to put myself where I am feeling like a deer in headlights. All right. So I'm sorry, guys. I'm not going to be disclosing any positions, but just know this is what I'm going to be doing. All right. Guaranteed. I still will be providing all of my trades. All right. Netflix trade, by the way, we can look at that, but we'll look at that on the weekly report. We're not going to look at that in today's video. It's already an hour long. All right, and yes, I'm putting this out earlier, so everybody will have like more time to watch these. And yes, we didn't have a video yesterday, so I guess it's okay that this was double the normal duration of like 30 minutes of these videos, so it's fine. All right. But yeah, here's what I will be doing. Okay, here's what I will be doing. And this way, I don't just get to play the indices, and I get a lot of freaking reps, guys, because I'm a chartist. All right, I can I can spot things on charts, guys. I can spot things on charts. All right, and I'd spot like a lot. Like now that we're looking at these, like even in the past like week or two, I've spotted just a lot of freaking there's a lot of freaking opportunities just even on these names right here. All right, that like now that I'm going to be playing how I'm about to expose. I will always have capital to play these things. All right. So indice trades, the max I go with my total account size is 20% into these indice trades. All right. So in all of these will be swing trades. All right. I will not be like, there will be day trades. All right. But guess what? All right. Day trades will be limited to 2% of the account. All right. So anything, I won't get that extreme dopamine rush, that head high from, seeing insane gains all very quick in one day. No, if you want to play it, all right, it's going to be with 2% of your account, which means you can't be using a lot. Okay. When I'm up to 100K, that will be with $2,000. All right. But if I get back up to, we'll just say 50K. All right. Then I'll be day trading with $1,000 tops ever. All right. Ever. All right. So you have the swing trades. On the indices, those can be tops 20% of the account, max. All right. And those are the ones that I enjoy taking the most. I am going to be the most accurate on those. And those will be done with 60 to 90 days on the contracts. And guess what, guys? We are going to be introducing spreads into the mix. Your boy is going to have to change from a cash to a margin account. But this is also the next step in my... I know how to do spreads, guys. I've done them. All right. I learned on them at the start of the bear market. I was starting to do them, and I stopped now because I brought my account back to a cash account. But I will say they always provide that extra layer of risk management. Okay. If the trade goes against you and you have the short and long side, all right, you get to like literally buy back the short side if the trade ends up going against you, and there you go. And then you can double down on your long side, do whatever you choose. Either way, you have that added layer of safety. So the trades that I take on the indices, not now, okay, after this next leg lower, I will be taking, I think it's going to take 2 to 3 business days, so I'm going to need to do that. But either way, I will need the account to be over 25K for me to really want to do that anyway, because I am used to right now, like cash accounts make it so you can literally hop in and out on the same day. You can have unlimited day trades. You just can't use that same cash more than once. All right. So that's like the limit of this. But I mean, I like the cash account, but you can't do spreads in a cash account. So that is why I will be doing that. All right. But so far, guys, risk management plan, the foundation of the risk management plan. All right, 20% into indice trades max. Okay, in normal swing trades, I am comfortable, and this is me, guys. I am comfortable with taking big bets. All right, I am at the point where like I talk about this a decent amount on this channel, guys. I am a 23-year-old. Okay, I don't have like I can risk. Okay, I can risk. I can take those bigger risks because I want that reward, okay? And like the more things you add into your life, okay, the more responsibility you have, the less risk you really can take. The more things you have in your life, okay, you got that car payment, you want that nice car, all right? It's going to come with more insurance money too, all right? Guess what? Less risk you can take, okay? You want that house, less risk you could take. Want that kid, less risk. Dogs, now I got those, but yeah, less risk, all right? So, like, my point is, I'm in a stance where I'm in a position where I can definitely take risk. All right. So 10% on each swing trade max. All right. This would be for me taking on any of these tickers right here and more. If I see them, all right, I will take them. All right. But that would enable me to do that. So we have 20% on indice swing trades, and then we have 10% max on normal swing trades, and then we have 2% on day trades. And these are when I see opportunities, and these we can throw that into day trading. We can call these counter trend moves as well. All right, we can like getting those intra move swings, I guess we could say. Yeah, I guess it would be the intraday swings. So yeah, I mean, playing those counter trend moves, I one of my rules that I wrote down, I have about 5 right now, but one of those rules was not to like never play counter trends. Well, guys, I'm gonna be honest, I am still pretty decent at calling counter trends. All right, I am still pretty dang solid. Okay, and when I made that rule, no, I was getting extremely frustrated here. I came to the party too early. All right, I will also be putting together a checklist. All right, it is en route, but not en route, underway. The checklist is underway of tops and bottoms checklist, but there also will be a checklist for my trading as well. All right, that is not it's not under construction yet, but that first one is. All right. So yeah, I mean, all in all, guys, this is what I preach. All right, guys, if you have pain, you need to use this pain to your advantage, okay? Or the pain happened for absolutely no reason and it was a complete waste. All right, and making sure this whole mess, okay? Not only is it not going to knock me down because I'm gonna have my 100K. I'm gonna have exactly what I wanted, okay? Exactly what I wanted. All right, and but so not only is it really gonna knock me down, all right, it definitely rattled me, but not only is it not going to knock me down, it's also going to allow me to it's going to accelerate my course. All right, this whole applying risk management, guys, this is a huge thing. Okay, that like I haven't had the most of that. My whole risk management has been like, hey, you don't go all in. Okay, you enter with 1/3 at a time. Okay, that was it. All right. Obviously there will be levels that I will have to start identifying a risk management just like when I'm entering each position, like, hey, here's your stop. All right, and there will be that. But for these big swing trades, like I just said, those 20% indice swing trades that will be done only with 60 to 90 day contracts, and they will have spreads. All right, so it will be that. I will be trading the spread. They will is that called the vertical? I think that's just called you could have a long vertical, you could have a short vertical, or whatever. Put vertical spread and then a call vertical spread. I think that's what those are called. That is what I will be trading. Okay, I started to trade those a few months ago. I stopped, right? But now I'm going back to them because again, it has that added layer of risk management. But yeah, guys, that is just kind of my that is my like guaranteed way of never getting put in this position again. All right. And yeah, that is something I look forward to. I will need like I said, like I will only be buying the 60 to 90 day contracts on those indices swing trades, all right? So when I'm finding a top, all right? So over here I would have been loading the boat on whatever it's called on the it would have had 60 to 90 days, so it would have been March to would have been right off the bat. I would have been attracted to the March 17s and then something in April. All right. That would have been something what I would have been playing. And I would have not had the stress that I've had, that I've been dealing with recently. I just would not have had that added stress. All right. But there also would be the spread. All right. So that would be pretty fun too. So say I started entering over here. All right. And I shorted a put and you end up having here. Well, now I buy back the shorted put. All right, because or not buy back the shorted put. I would sell the all right, never mind. Hang on. I gotta really put together another. Again, I mean, I'm trying to create a systematic approach here. But yeah, let's not talk about spreads yet. All right, because that just did not make sense out of that at all. That was a brain fart moment. All right, so I am going to be leaving you guys off with that. All right, we can just look at Netflix. Because this is something that I am going to be, I'm not going to be adding puts this time around to this. Well, I mean, I might. All right. But as it stands, I only have like 1K on the side right now. So I am just sitting on my hands. All right. But yeah, I do think now that you got back into here, right? This is something I was noticing when, that was happening. It was a thought I had. All right. And, but yeah, all right. It was a thought I had. I didn't think it was going to end up happening, but as you see, you are doing this. I want to come over the weekly time frame. All right, you could end up getting rejected on the top of this channel right here. All right, or you could end up pushing up into the zone. If you come up to the zone, guys, whenever it may be, if you do, I do think it's going to be moving opposite to the market. And I think there's a very solid chance that you don't move opposite to the market. I think you do end up falling down. But either way, you do have this triple bearish divergence going on here on Netflix weekly RSI. Not RSI, weekly CCI. And your weekly RSI is literally right under 70. It is at 67.90. All right. This is a place where you haven't been since here. This is why I think this is a supreme short. All right. March 17 contracts, I do think are a move here. All right. But yeah, I mean, you had the bearish divergence form on your RSI there, on your weekly RSI that ended up giving you that. And yeah, as you saw, we fell 70%. I don't think you fall another 77% from here, all right, because that would bring you way down. But I think there's a solid shot you come back down to these lows. All right. I think there's a very solid shot here. And as you do see on the weekly time frame, you have momentum fizzling out. All right. That is what's going on. And if the overall market is selling off for weeks on end, I wouldn't be surprised to see Netflix completely fall off a cliff with the market. All right. So it doesn't need to reach the zone. If it does reach the zone, this is like a guaranteed. Like this is a very extremely low risk short. If you do come up here, your stop could literally be somewhere over here. All right. 415 to anywhere in the zone here. But like at the end of the day, with the market doing what we know it's about to be doing, it makes no sense for Netflix not to be falling from this range right here. It's probably going to come back down into this. It's going to break down from this range. It's going to come back down into that range. All right. Now, the last thing I want to talk about is the fact that Apple is right up here, right before earnings. All right. You got earnings next week. So we have 1, 2, 3. We have 4 trading sessions until, or 5 trading sessions until earnings. So I guess it's next Thursday you have earnings here. Is it next Thursday? Yeah, it is next Thursday. I find it funny that you're right here at the top of the channel. All right. I don't think you're going to end up staying up here. It's the same thing with the market. Okay. If the market is falling, you're going to have all boats falling with the tide. All right. And Apple happens to be the biggest boat. So it's going to be moving. Okay. Yeah, Apple's literally the biggest component of SPY and QQ. So if they're falling, this thing's going to end up falling. All right, we called for this counter trend when we were literally back down here. This is I'm also, guys, going to be putting together on individual stocks. Apple already has one of them. Just signals that go off where, hey, I buy a call or put with a certain amount of time. Okay. In Apple's, one of those is the bullish divergence on the RSI as it is in overbought territory. All right. If it comes down and hits 30 on RSI, that automatically that is half the buy. But then you get a bullish divergence on the RSI down here under 35. Holy Jesus, guys! Look, that's what gave you this. All right, you come over here. I think no, you didn't have one over here. But either way, look at like it came down here. All right, every time Apple comes down here, I really do think it's under like 35. You get a significant bounce. Okay. So I'm gonna have to look at that, but I'm gonna be putting together just a list of just different patterns I'm seeing on the charts, and I don't know how I'm going to put this into action. All right, but there will be. I don't know if it's going to have to be through a software. All right, I don't know. I don't think I can make these types of alerts on TradingView. So I'm gonna have to find a different charting software if I want to get some of these alerts and have that like complete systematic approach to my personal trading. Then I will need to find something else. I don't know. I don't know though. Look at what Tesla's doing, guys. Tesla, I'm just saying, guys, Tesla is probably a extremely high risk short right now from where it's at right now. I don't know exactly what the reward would be if you were to buy Feb 17 puts going out over here. But personally, like, if I like this would be a trade I would personally take. All right, look at this thing. Look where you are. You're at 214 on your CCI here. Your RSI is almost back up into the 70 level, the overbought territory. And last time you were up here, that is where you started your decline from 311 all the way down here. All right. So they probably would pay about 100% if you do buy the 145s. All right. Yeah, 145, 146s for Feb 17. You come back down and give back today's price action, you'll probably be up about 100%. But yeah, this is an example of one of those trades that I would be comfortable throwing 5-10% of my account into. And that's like that is that. All right. And this is just something that would enable me to just have a bunch of different reps. All right, like straight up a bunch of different reps instead of just getting you know one rep down here, one rep up here, one rep here, one rep here. Just at these different reversals. I just want to get a bunch of reps under my belt. All right. So this is the way that I see in doing that. All right. So yeah, I guess with that being said, guys, I will catch you guys in the next video. Peace.